This is Boom Bust, broadcasting around the globe and covering the world of business and finance and the impact on us all. I'm Ben Swan.
And I'm Christy I in Washington. Here's a look at what's on deck today. Just one day after the news of Google's controversial partnership with Ascension Healthcare, federal regulators have launched an investigation. Our panel will weigh in on what the feds might do and a warning of what this new health tech world means for all of our futures. And speaking of the feds, Telegram is now firing back at the SEC and has asked the court to dismiss claims that would hold back its new Gram token. We'll dig into why Telegram says the SEC has no case.
Plus, Professor of Economics and author Richard Wolff is here to talk about the latest stall in the U.S.-China trade talks and the problem with U.S. fiscal policy overseas. We've got a lot to get to today, so let's get right to it. Let's begin here with Google, because just one day after we told you that Google has partnered with Ascension Healthcare, the second largest healthcare provider in the nation, to gather and process data on tens of millions of Americans, a U.S. federal regulator has initiated an investigation into this deal. So we have now learned that the Office for Civil Rights in the Department of Health and Human Services is going to look into the data collection and whether or not it violates HIPAA laws. Now, these are federal laws that protect the identity of medical patients and their information. Again, keep in mind, Ascension Healthcare operates 2,600 hospitals and hundreds of doctors' offices, which means that about 150 Google engineers now have access to very specific health information on about 50 million Americans across 21 states. Prior to this agreement with Google, which launched in July of 2018, Ascension had its digital records spread across 40 data centers. But let's be very clear about this. Google is not taking over the digitization of medical records. Google is uploading these tens of millions of individuals' records to its cloud computing service, and then it's using that information to build advanced artificial intelligence, which will be used to prescribe treatment to doctors and for patients. Oh, and remember this, that over the past year, no doctors or patients were told that their information was being handed over to Google. We have a lot to get to today. So joining us here in the studio is the host of The News with Rick Sanchez. Rick Sanchez, glad to have you here. By the way, he's also the founder of a managing care company in South Florida that was recently listed as the fastest growing healthcare company in America by Inc. magazine. And from New York, global regulatory attorney Myles Edwards. And Myles, I want to actually begin with you here because the regulatory agency looking into this deal is considering whether or not HIPAA laws have been broken. Now, we know this, that the feds have required that medical records be digitized, but that is not what's happening here. In fact, all the records that Google is obtaining are already digitized. So one, you have the issue of the records being put into the cloud, which already puts them at risk of hacking exposure. But two, Google is collecting these records to build future business products. How does that fit into HIPAA laws?
Well, it does fit into HIPAA laws. And what's really interesting about this situation is the U.S. government is investigating them, but it's a Health and Human Services Civil Rights Division which is investigating them specifically to determine whether this information will be used to make insurance determinations. That is, when you apply for an insurance policy, will something that occurred in your background influence that decision? Now, in my opinion, what they're building is what I call a lifestyle index, which is where they take your medical records and integrate it with all the other information Google has ever collected upon you and determine whether you're a good insurance risk or not, which is really going beyond what that information was meant for. So not only is there a civil rights component to it, but there's also a question of, did it violate HIPAA? I say yes. No one knew about this situation, this Project Nightingale, until a whistleblower within the project basically went ahead and dumped this information on Daily Motion. And so what happened is there was no information that individuals' records were being used in this manner, no consent, which violates HIPAA. And I would also say that the way that the information was used and stored and the security protocols around it certainly did not meet HIPAA.
Yeah, that was the question I was going to follow up with, so we can go to Rick. But the big question has to be whether or not consent plays a role here.
Exactly. So, Rick, that's the other big issue here. And that's the other issue of a company like a Google having access to so many records and connected social media, healthcare history, fitness of these patients. So are we looking at a potential future where insurance companies can access these data and analytics and determine whether or not people can get coverage or are denied claims?
Well, let's try and make this as simple as we can for everybody who's trying to understand what is incumbent upon us as a doctor or a provider when it comes to medical records.
Yeah.
That's the data that we collect from the patients. Yes, doctors or doctors' offices are allowed to share certain data, but according to the 1996 law, which established how that information is shared, it has to be for a medical function. In other words, Christy, you go to see your doctor, she gives you a referral to see another doctor, and then your doctor sends your data, your file, over to that doctor because there's a reason for them to have that. I see no reason in the world where someone would be able to use that dicta, that information from that law, to then say, well, we're going to share it with Google, which has nothing the hell to do with medicine. So that's the real problem here. This information is sacrosanct, and it's being shared with a company which shares and collects data.
But then legally wise, they are structured as a business associate. Ascension is structured as a business associate to Google, who is just a technology provider that is assisting doctors with the information. So they're an independent party. So that is the claim that they're arguing here.
No, and I get that. But the point is, and I think that you make a valid point there, the point is this 96 law, the way it's structured, say just because they're your business partner doesn't mean you have the right to share information. They have to be a business partner that then allows you to share because there's a specific medical function that's going to be served for the patient, not for the business, for the patient. And I think Myles will probably agree with me, that seems to be what's missing here.
Well, and then Myles, to that point, I mean, isn't the part of the issue here the fact that we're looking at Google not just delving into this part of healthcare that they're in right now, right? But they're developing AI with this. And I don't want this to be missed in this discussion because the AI component of it goes far beyond just collecting and processing information. They're actually building a new business model and new business tools for the future.
Absolutely.
Right, so here's the question, is with this AI, do we get to the point in the future where there are machine learning that's telling doctors what they can and cannot do, and let's say the doctor doesn't follow that, and now health insurance companies say, well, we don't have to pay on that claim because you didn't follow what the machines told you to do. Is that where we're headed?
Absolutely. Absolutely. There is not enough healthcare professionals to cover the medical needs in the United States. In fact, health information data doubles every 73 days. And you're going to use AI to do diagnostic. You're going to do this to develop tools to help doctors, absolutely. But what's going to drive it is this information, this lifestyle index, and it's going to determine who gets treatment, who doesn't get treatment, who gets insurance, and who doesn't get insurance. And this is what the frightening point about it is. Not only do I believe that Google has violated HIPAA, but they probably violated several state privacy laws as well, you know, by going ahead with Project Nightingale.
Yeah, and you know, can I say something here that sometimes gets lost in this discussion? The expectation of privacy that a patient has when he goes to a doctor is at a premium. It's so important. The reason I would go to see my doctor and tell him something very private about myself that I wouldn't even want my family to know about me is because I have an expectation that that information is never going to get out. The damage that we do to the patient and to our medical system if we allow this type of thing to happen is unbelievable in terms of what it could do down the line. Because it would mean that in the future, I may not want to go to my doctor. I'm going to get on a plane and go to Mexico the next time I need a checkup.
Because you don't have that connection. And then lastly, and I know we're short on time here, but something Myles said about state regulatory laws. And Rick, I want to ask you about this real quick. You know, Illinois has this biometric law that essentially everyone's getting sued for. Vimeo, Dr. Pepper, WeWork, everyone's sued under this thing because they don't get consent. No one gave consent for this. It's been going on for over a year and there's been no consent. How do you get around that?
Myles will tell you, in most practices, if you're a provider, even if you just have, let's say, somebody working answering phones, for example, that person has to be checked out to make sure that they're not accidentally sharing information, even if it's just wellness stuff. So, I mean, most doctors go through this very rigorous process to make sure something like this doesn't happen. And they usually get fined $4,000 for one violation. We're talking about 10 million people here where their data was already filed with Google. This is a major violation. I can't see it any other way.
And Myles, I'll ask you the same thing then, just very quickly. Go ahead.
Yeah, and I just want to say there's no private right of action under HIPAA, but you can get a lawsuit under state privacy laws, either for negligence or breach of a imputed contract. So what I'm going to start seeing is I'm going to see some class action suits happening at the state level for negligence against Google. You're going to have the state attorney generals come in as well, and they're going to pursue this very vigorously, as they have been pursuing Facebook for the past several years.
And real quick, Myles, before we go, I know we're running over here, but did Google know they were doing wrong here, do you think, simply by the fact that they kept it a secret? They didn't tell anyone. They didn't even tell doctors that they were doing this.
Absolutely.
Isn't that your answer? The fact that they didn't tell them, doesn't that kind of, wink, wink? There's a reason you don't say something sometimes. I think it kind of hints at guilt. But then again, I'm not a lawyer.
Myles Edwards, Rick Sanchez.
I am, and I think so, yeah.
Yeah, appreciate you guys very much on this. Thanks so much.
Thank you.
Thank you.
Messaging app Telegram has asked the New York Southern District Court to dismiss the SEC lawsuit against its Gram cryptocurrency. The SEC previously issued an emergency TRO to block the launch of the network, arguing that Telegram was engaged in the sale of unregistered securities when it sold its Gram tokens. Now, Telegram is clapping back Tuesday, refuting all the allegations made by the SEC. Telegram claims that the SEC has engaged in improper regulation by enforcement in this nascent area of the law and failed to provide clear guidance and fair notice of its view as to what constitutes as a violation. Telegram has voluntarily engaged the SEC to seek guidance prior to launching Gram, yet the SEC has failed to provide guidance prior to bringing this enforcement action. Furthermore, the Gram tokens constitute as a commodity or a currency, not a security under the federal securities law as defined by the 4 factors of the Howey test. So this blanket treatment of cryptocurrencies as securities without any meaningful differentiation as to its function or utility is myopic and sets a very dangerous precedent. Telegram said it didn't register with the SEC because it's not required under the federal securities law, as the $1.7 billion sale of the Grams fell under the exemptions to the Securities Act of 1933, where these tokens were sold exclusively to accredited investors. The firm asked the district court to deny the SEC's claim for relief and dismiss all claims with prejudice. In the meantime, Gram has agreed to delay the launch of both the Ton blockchain and the tokens until after February 18th, when the next hearing is scheduled.
Yeah. So it's already a significant delay. But look, for people at home who are trying to make sense of this, because it's very complicated, part of what makes it so complicated, right, is the fact that the SEC keeps moving the goalposts. They keep changing how this works. So one day they say, well, you've got to file this way because this is a security. Then the next day they say, well, that one doesn't count as a security. That one counts as a currency. And so when the SEC can't even make sense of their own structure, what Telegram essentially did was they said, at this stage, it's a security. At this stage, it will become currency, correct?
Exactly. And furthermore, the SEC is actually going back on its own words because there is precedent. Block 1 was actually dismissed on September 30th of this year. They launched their currency. They launched it in an ICO of $4 billion in 2017, 2018. They launched it. They went to the SEC, and the SEC was like, okay, pay a $24 million fine, and you're clear. You don't have to take the tokens back. You can still trade it, and EOS is now still operable.
Yeah, but they fined them $24 million, and how much was raised?
$4 billion.
$4
Way
billion
more than Telegram.
Raised.
It was only raised 1.7.
Right.
And really, the really concerning thing is right now the SEC seeked emergency relief. And this type of remedy is only typically due to ongoing fraud cases.
Right.
And there is absolutely no indications of fraud anywhere in this entire case. There's
a complete lack of consistency from the SEC and from the IRS when it comes to crypto. And until they can figure those issues out, I think we're going to continue to see this.
Exactly.
All right. Well, time now for a quick break. Do not go away. We're pretty fired up over here. Professor of economics and author Richard Wolff joins us. He's going to talk about the latest stall in the U.S.-China trade talks and the problem with U.S. fiscal policy overseas. Plus, is it possible that China's central bank is actually looking at privacy as part of its digital coin? No way, right? We're going to tell you what those central bank authorities are saying about allowing anonymous transactions. And as we go to break, here are the numbers at the close. Welcome back. Here are two words that you do not hear very often together: China and privacy. And yet, China's new stablecoin project appears to be trying to find a balance between regulatory enforcement and allowing for some privacy. Statements from the People's Bank of China indicate that Chinese authorities appear to understand the need for some privacy in the crypto space. Stating at a conference in Singapore, "We know the demand from the general public is to keep anonymity by using paper money and coins. We will give those people who demand it anonymity in their transactions. But at the same time, we will keep the balance between the controllable anonymity, if that's such a thing, and anti-money laundering, CTF, counter-terrorist financing, and also tax issues, online gambling, and any electronic criminal activities." So, obviously, one of the key values of cryptocurrency, maybe its greatest value, is peer-to-peer transactions, as well as anonymous transactions, though not all cryptocurrencies are actually anonymous. Some, like Dash and Monero, are, but others can be traced and connected with users. Those who believe in the original role of cryptocurrency recognize the value of privacy. And let's be clear here, any digital currency issued by a central bank is not a crypto. Having said that, China's central bank said it will guarantee cash-like levels of privacy, but admits that it will retain the ability to track down crypto users if it suspects illegal activity like money laundering.
While only a week ago, the markets were cheering and roaring to new all-time highs over a breakthrough in the 18-month-long trade war between China and the U.S., today it looks like we are back again to square one. One with more downside risk as the market optimism has been now overextended. President Trump, in a speech Tuesday, said that phase one could happen soon, but warned that he was ready to raise tariffs on Chinese imports very substantially if that fails. Trade talks appear to be stagnating again as China insists that Trump roll back some of its punitive tariffs imposed. After all, China had agreed to repurchase a substantial amount of eggs. Quid pro quo etiquette would dictate that China gets something in return. However, Trump denied rolling back the tariffs and instead is threatening to slap more tariffs right in time for the busy holiday consumption season. So how does this all going to play out? To help us answer that, we bring back Richard Wolff, professor of economics at the University of Massachusetts Amherst. So, Professor, in recent weeks, we saw the balance of probabilities shift to the positive side in getting a phase one deal done. But now, after Trump's speech, we realize that nothing has changed. Risk is still on the table. And you can't say a deal is closed without offering any details on when or where it's going to be signed. So in fact, there's actually more risk now with it being so close to the holiday consumption season and the market's at near all-time highs. So quantify the risk for us, and will the Fed be there to support the markets and back Trump if phase one fails again?
Well, I think you put your finger on it in terms of the risk actually getting larger. It has been getting larger steadily across this whole event. If you go back to the beginning, Trump promised that he would win the trade war and that it would be a short war. It's turned out he hasn't won anything, and the war keeps dragging on. I think therein is the clue. When Mr. Trump does his bluster and his threats, this is theater. Theater for his political base, more urgent than ever to distract attention from the impeachment and other problems that he has. This cannot work with China. He has done this already. He has threatened tariffs. He has imposed tariffs. The Chinese are not about to cave in. They've shown that to us now for over a year. Today's Financial Times carries a story which clearly indicates that the damage to manufacturing in the United States is greater from Trump's trade war even than it is in China, and both countries are suffering. So what you're going to have is a theater, on-off, rising risk for as long as the Trump administration thinks that the political gains for his re-election are larger than what he might lose from upsetting the world economy and the American economy from the fallout of this war.
Well, you got to think, Richard, that it's a bluff, certainly when he's talking about raising this before the holiday season, because they had threatened to do that before, and then they pushed the date to make sure it wouldn't interfere with the holiday season. If you want to make Americans mad, make Christmas presents more expensive. But China wasn't the only target yesterday. The president also alluded to tariffs coming to other countries that, quote, mistreat us. He criticized EU trade policies before a November 14th deadline, and this dropped European stocks across the board on Wednesday. So will the president, do you think, announce tariffs on cars and auto parts imported from the EU come November 14th, or will he also have to delay this again, at least past that holiday season?
I think it's part of his theater. In other words, if he decides that cutting a deal, a primary phase deal with China, will get him a boost in the stock market and the pleasure of people whose income is significantly drawn from stocks, he will do that. But he doesn't want it to look, as it will to many of us, as a cave-in of a policy with China that failed. That's too dangerous for him and his base. So if he cuts a deal with China, you can expect to rev up the noise with Europe so he can continue this game of protecting us from other folks, which is the theater theme of these trade wars. So one will offset the other in order to get the best of both for his political calculation.
Well, he's only able to do that because he has the Fed supporting them. Now, we were able to talk about repos yesterday and the Fed's intervention in the markets in order to stabilize the Fed funds rate and prevent it from spiking during the liquidity droughts. But then a funny thing happened today. The Fed once again lost control of the very rate they were mandated this time in the opposite direction. So we find the effective funds rate just at 1.55%, just shy of the Fed's lower bound target of 1.5%. So right now, does the Fed have any credibility now in maintaining control?
Well, it's showing that it has less and less. You know, we're coming off an unbelievable, unprecedented time in American history. Since the crash of 2008, the Federal Reserve has pumped more new money into the economy than we have ever seen before in a comparable period, driving interest rates to below zero, which we haven't seen before, et cetera, et cetera. All that money, think of it as sloshing around globally, because other central banks have done similar things. So it can't control all of that money because it can move so quickly nowadays from country to country, from securities to hard goods and back and forth. And so it's kind of always a little bit too late, too little at the party. It doesn't have the control. And the reason that's so important, and I commend you for underscoring it, is that we all suppose that that endless money, if it starts to create an inflation, that the Fed can and will step in to hold that back. What you're seeing in the repo market is evidence that confidence in the ability of the Fed to do that is misplaced.
All right, and so adding to the U.S. problems with monetary policy, how about this? You know, the dollar is being dropped by China, India, and Russia as a means of payment. In fact, as you know, that's the whole point of BRIC nations, right? Brazil, Russia, China, India, South Africa. What they have attempted to do is create systems to go around the U.S. dollar. Is this just an inevitability? Even as the Fed continues to print, that world reserve currency of the dollar will soon go away, or at some point go away?
Yes, I think this is an inevitable process. The Russians, the Chinese, and others have been talking for weeks and months, and indeed in some cases years, of wanting to get away from the universal dependence on the dollar. The Americans keep thinking they're the top of the hill. They can keep it going forever. We now have clear evidence that they are offering an alternative. And given the power and growth of the Chinese economy, their involvement alone is changing the balance, and the impact on the American economy of the declining role of the dollar internationally will be profound and is a major issue in the years coming up.
Professor Richard Wolff, thank you so much for your time.
Thank you.
Well, Tesla has announced that it will build its newest vehicle factory in Berlin. Tesla's CEO, Elon Musk, made the announcement on Tuesday, saying that its new Gigafactory 4, how about that for a name, would be built in Berlin near the new Berlin airport. Musk, who, by the way, is in Germany for an award ceremony, says that the new factory will also help to create an engineering and design center in the city. If you follow Tesla, you know that Musk had originally indicated that that new Gigafactory 4 was going to be built in the UK, but Musk now says that uncertainty from Brexit was the reason he chose to place the factory in Berlin instead. I doubt that's true, but what many people don't know about Berlin, especially here in the United States, is that even though it's Germany's capital, it is also home to, as a 2018 article in timeout.com calls it, quote, A mind-boggling number of abandoned buildings, old military camps, former factories and enterprises, hospitals, swimming pools, colleges, sanatoriums, airfields, and more. How about that?
Well, we don't know if Tesla's going to fall victim to the Berlin curse of abandoned factories, but let's just put it this way. Elon Musk has abandoned his own projects many times before.
Yes, he has.
He's went on from Tesla to Solar City to Hyperloop to The Boring Company to SpaceX. How many companies, how many projects has he abandoned?
It's true. He'll fit right in.
That's it for this time. You can catch Boom Bust on DirecTV, Channel 321, Dish Network, Channel 280, or streaming 24/7 on Pluto TV, the free TV app, Channel 279.
Or as always, hit us up at youtube.com/BoombustRT, and we will see you back here mañana.
And it's now time for your global stock market walk for the week.
This would actually mark the slowest year-over-year growth.
If wages are flat, even setting aside concerns about equity and human welfare. The most from this trade war that he's chosen to initiate with China. Want more Boom Bust? Of course you do. Then don't forget to subscribe.